You are going to love this information because let's face it, we all want to win trades and make bank. But knowing when to take profits and when to exit can absolutely make or break your success. Trust me, I have learned this the hard way. If you wait too long to pull hard-earned money off the table or take profits too early, you will be stuck with a crappy win rate, leave too much money on the table, or even worse, blow your trading accounts. But don't worry, I am here to share a secret weapon for trade management, the average true range indicator, aka the ATR. It is the missing puzzle piece that can take your win rate literally from zero to hero. So buckle up and let's explore the power of the ATR together. This video was asked for yesterday by a client who is just getting started on his trading journey. He was having some struggle getting his ATR onto his TradingView charts like I had shown in my beginner's course. So I'm going to start out by showing you how to connect the indicator in TradingView and customize it to your strategy just in case you are in the same place that he was. So what you're going to do is in TradingView, you're going to come up here to your top line and you're going to come over to indicators. And right here on indicators, you're going to click on indicators and you're going to go to search, and you can just type in ATR or type in average true range, and it's going to be the very first thing that comes up here under technicals, and all you do is select that and it's going to pop up right here on the bottom of your screen. You can just close that indicator window down, and you absolutely can leave the indicator just like it is right now. This ATR, it absolutely works right out of the can, right out of the box, just like it is. And you really don't have to customize it at all if you don't want to. As most of you know, I'm a huge minimalist on my charts, so I don't like anything on there that calls my attention to it if it's not necessary for decision making. So for that reason, I changed the ATR, but I'm going to show you how it works just like this right now. If you were to use the ATR as it sits, you see that there is a line right here kind of showing you the different readings and how the ATR is currently tracking for your pair. Now the ATR is the average, stands for average true range, and what that means it is the average of a certain number of candles, how many pips those candles move. So if you have your ATR set to 10, it is going to take the last 10 candles and it is going to average the number of pips for those candles out, and that's the number that you're going to see right here on the ATR. So you're seeing right here it is 5 pips. Remember, we're not looking at that last number, so you're going to be at 5 pips right there. Now it's 6 pips, now it's 7 pips, and you see right here where you have this higher peak that you're at 11 pips over here. If you look here, you're at 11 pips. And so you're kind of seeing this in a visual line, just showing the average number of pips that those candles are moving. And if you click right here on the gear for settings, it says, hey, what time frame do you want to see? It meaning that if you are trading on right now, my chart happens to be sitting on the 5 minute, but say you want to see the ATR for the 1 hour, you would just come up and click on 1 hour and say okay, and you're going to see very, very different readings at the 1 hour than you were seeing at the 5 minute. And you're seeing that it depends on what candle you're on. You're going to need to be on the hourly candle to get those readings. And right now you're seeing a ATR of 22, where before you were getting ATRs of 5, 6, and at its uppermost 11 pips on that 5 minute. And so again, if you're not getting readings and you have your ATR set to the hour, you're gonna need to be on that 1 hour candle to see the number actually show up right here. That's the only part of not running it on your chart time frame, is you'll need to be on the candle that closes at that hour mark, which that's this 355 candle that you saw a while ago. This 355 right there closes at that hour mark. And so that's what you're seeing. That's a 19 pip ATR. So with that said, I'm going to show you how I use it and talk about it in just a minute, but let me show you how to get it on the charts in case you're trying to copy what I showed in the beginner's course. So if you come over here to your ATR bar and you click these dots here for more, I take and move it to the existing pane above, and that's going to slap it right here with the candlesticks. And now I definitely don't want to see that. I definitely don't want to trade with that on there. And so I'm also going to come over here then again, once I get it up to my chart, I'm going to click on settings, and I'm going to come here to style, and I'm going to come here to the line that you're seeing, and I'm just going to bring that opacity down to 0%. I don't want to see it, but I want to be sure. I don't have to have the label, but I do want to make sure I have the value in the status line, because that is this number right here. Oh, hang on just a second. Let me turn this back to chart. That is this value right here that you're seeing in red. And just depending on what color if you're trading on a light background or dark background or just your preference, you may want that color to be something else. If you want the text to be blue, or if you want the text to be orange, we'll turn it blue and you can see it. It's now the ATR reading is now blue. You can turn it back to red if you like it to be red, whatever. Different colors and different times can mean different things in my strategy, and I always want things that draw my eyes to where I need information and hide or minimize things that I'm not using. And so right now, I only use the ATR when I use it for this number. This reading right here is all I care about. And that is saying if I'm on this candlestick right here, if I'm right here on this candlestick and you look up at the ATR, it tells me that the ATR at this point in the market for the last, let's see how many candles it was set on, for the last 14 candles is going to be 5 pips. And so if I was using the ATR at that point, that would be the number of pips that I would take in the reading. Now you can also customize the ATR by going back to this settings button, to your gear button, and you do have the time frame, which again, if you have it on chart, it's just going to be on whatever time frame that you're on at the moment. It's going to track to that exact average number of pip movements. You can, like I showed you a while ago, you can change that to sit on whatever time frame you want. You can also change the length, and depending on what strategy I'm trading, there may be a time, and I have never gone below a 9 or a 10 in my average length on the ATR, but I have gone all the way up into the 30s, like 33. I was trying to think if I've actually traded a strategy with it over that. It seemed like there was a strategy maybe in the first year when I was building indicator strategies, which I loved and what was very fun, that I used one for the 50, but I needed a really long length. But for most people, anything between your 14 where it kind of comes as a setting at, or 20s to 30s is going to be the right length. And all it's saying is, let's take that back to like 21. All that's saying is how many past candles it is going to take and average together to give you that average pip movement. And again, there can be strategies where it is profitable and good for you to have a longer average or a shorter average. But most people, for most strategies, anywhere between 14 and say 21, 30, 33, something like that is going to be more than what you need. And you're going to find that that's going to work wonderfully for you. You also can come after changing the length, and you can change the smoothing of that to the RMA, the running moving average, to the SMA, the simple moving average, to the exponential moving average, or to the weighted moving average. And so it is just like your moving averages. They're all going to track similarly. It just depends on how they calculate the data. Usually the SMA is what I usually run the ATR on. I have used the EMA, but it didn't make a huge difference in my trading in the way that I did it. So I usually just run a simple moving average. But again, you can test this out for your strategy and see how it fits with you. Anyone that has taken any of my courses or is trading a strategy that I'm putting out, they're going to have my settings and know exactly how I used this and what settings I use. So if you're using something different, just test that out. Again, that part, you're going to get similar readings, and you just have to kind of see when those pip numbers change and if that affects your trading strategy. Now, there are 3 ways that I have used or sometimes used, really depending on the strategy that I'm trading, this ATR. So I've showed you how to set it up and kind of how to customize it. Now I want to show you how I've used it. Now, part of the 3 ways, now let me flip over to the hour chart. Let me remove that. Let me flip over here. Now, one of the 3 ways that I have sometimes used the ATR is as a take profit level. So I've used the ATR to tell me how many pips after my entry that I will be taking profit. When I use it this way, I'm usually taking a 1x or a 1.5 times the current ATR to show me when to first pull my money off the market or off that trade and put that money in my pocket. So using the average market movement or average pip movement of your pair on your trading time frame to manage your take profit is smart, especially if you find yourself taking money off of your trade. If you're watching your trade play out and you're getting all stressed out and uptight and you take money off your trade due to the fear of losing, or if you're leaving all of your money on your trade and you end up losing all of it and not pulling any off early enough, using the ATR can take all of the emotion out of that. Having a set rule for profits is key to winning trades and not subjecting them to your mood. If you're feeling good because you've been winning, you're leaving your trades on too long, or if you're feeling scared because you've had some losses, you're pulling your trades off too quick, the ATR does away with that and adds consistency and discipline to your trading. Also, in back testing, you will know exactly when you would have taken profit, and you're not just guessing at what you would have done in the live market. Put rules in place, traders. I cannot stress this enough. You will be a much better trader and show up more consistently if you put rules into your strategy. So the way that I use this ATR level is, let's say that I was taking an entry. Let's say that I'm getting in right here. I'm taking an entry and I'm saying, okay, I'm going to enter at the close, which wasn't the best entry, but let's just say I'm entering at the close of this impulse candle right here. And this was a big move, a big candle. And so I'm wanting to manage my trade, manage my take profit level. Let's just say I'm putting my stop loss here at the beginning of this candle, and I want to know if I am trying to run my trade, say, to this structure level right here, and I'm looking at a potential 56 pips that I'm trying to pull, that I'm saying in my trade, I think price will push right up here. We had strong momentum. This was the pullback that pushed price to break structure here, and I'm looking through my analysis and I'm saying, okay, so I'm looking for price to come about 56 pips, which is the reading you're seeing right here, and that's a risk to reward if I ran my stop loss here of 2.6, which is a great risk to reward. But in here, in this 56 pips, at what point do I take money off the table, if any? There are plenty of traders who would say, nope, I'm riding out all 56 pips and I'm not taking anything off my trade. And that's perfect. That's great in their trade management and in their strategy. I'm sure they've tested that out, and they may have a strategy that they go, no, my win rate's high enough, I don't need to pull anything off the table. I personally like to pull money off and put it in my pocket. I get plenty of opportunities for entries, and so if the trade's going in my way, I'll just take another position. I like to keep my money and to protect the capital. So in this situation, if I'm entering right off of this candle, I usually take the ATR of the candle previous, which would be this candle right here. And if you look up at the ATR, you'll see that the ATR is 22 pips. Now it just depends on how I'm running my take profit. Am I running the take profit at one time ATR, which is in this case 22 pips, or am I running my take profit at 1.5 ATR or even at 2 ATR? Nobody can tell you that except maybe somebody that's trading the exact strategy as you. But usually you and another trader are going to see the market differently. And so I would say always, always, always don't take anybody's word for it. Back test this out and you will know if the trade reverses on you and tanks to the downside. You'll know if you pulled some of your profit off the table and put it in your pocket. And in this case, when price moved up 22 pips, which would be about right here, let's say. So you would have hit 22 pips, let's say on this candle. So let me just zoom in a little bit here. You would have hit 22 pips right here. And I'm just going to pull this down right now just for this. And so at this point, which is not great, it's a 1-to-1, you would be closing out whatever your trade strategy told you if you were doing a one-time ATR. If you were doing 1.5 ATR, you would add 11 pips on that for 33. And so we would come up and say, well, where are we hitting 33 pips? It would be on this, it would be right here about, and our trade is still running. We're still shooting for this 56 pips, but if you're doing 1.5x ATR, it hits it right here. And so at this point, you would take whatever your percentage is, whether you take 50% off the table, whether you only take 25%, whether you take 75%, I tend to take a good chunk of my trade. Whatever my take profit one is, whenever I hit that, I remove some money off of the table. And then when you're back testing, if okay, and price kept playing, it pushed up here, and then it came all the way back to below my entry. Did you get stopped out? Would you have exited? When you're back testing, you can make up all kind of crazy stories of, no, I would have known, I would have stayed in. You don't know though, when you start to see price falling, you don't know if you would have stayed in or if you would have closed out. But for me, unless my stop loss is here at break even, I'm riding that out because I'm already risk free. That whole entire trade now is absolutely risk free. I've already got, in this case, 1.5x on my ATR. That was my first take profit. I know where I'm closing my trade out here at 56 pips, and I'm just letting that run. So I am easy peasy. I am just completely relaxed. And so for me also, with my trade management, I go into this in the advanced course of how I actually manage my trades. I actually do bring my stop loss to break even. And so when I was back testing, I would have known that I grabbed, if I was 1.5x ATR, I would have grabbed that at 33 pips. And when price retraced here to my entry, that I would know that my stop loss was already moved up, usually right above break even. And so that would have actually stopped me out. So I can have a whole lot more of an accurate back testing data instead of looking at this going, no, see, this is a winning trade. I got all 56 pips. Look at that. I'm a badass trader. And then you can't figure out why you're not making any money in the live market. And part of it is because the way you're back testing it out, it doesn't have strict rules. And so this will show you exactly, not only by your probability, but by exact rule-based data, and give you a much, much clearer idea of exactly how this is going to perform in the live market. You can also use your ATR, just with this exact example, as a stop loss. Again, I have used the ATR as a stop loss at one time, the ATR 1X, and at 1.5 as a stop loss. but I have never gone above that. So it may be for you and your strategy that you're like, no, my stop loss is always at 2x my ATR. I have never gone above 1.5, and I normally shoot for strategies that let me choose a 1x ATR, a one-time ATR as my stop loss. It just depends on your strategy, again, on my pair that I'm trading and how fast that pair moves. And sometimes, the trading time frame I'm on. Lower time frames, you might want to go a little bit more, a little bit less on a pair that's a little bit more volatile, and you're finding that your bias is correct, but you're getting stopped out too much at the 1x ATR. You may find that the 1.5 gives you exactly what you need in order to have a more accurate stop loss. And so with that, you would do the same exact thing where this was our candle before. If we were entering off this candle right here at the close of this candle, we want the previous candle, or this is the way I do it. And right now, if you look at the ATR, it's at 22. And so you would have your stop loss, which it was almost correct in the way I set it up, right here at 22. And you can say, oh, I'm shooting for this 56 pips right here. My stop loss is 1x ATR. It's 22 pips. And so I'm going to roll my trade forward. And you don't have to get all caught up with, well, the stop loss is different every single time. Because yeah, if your stop loss was based on this candle right here, oh, it's still 22. But if it was based on back here, it might be 28, it might be 27, it might be 29. It just depends. It is going to go up and down. But again, it's going to be a reflection of the last X number, whatever you've got your setting on, your X number of candlesticks and the average number of pips that they were moving. And so, yeah, it's going to be different, but okay, set your stop loss as your ATR is showing you. Take that rule and don't be trying to adjust it, unless sometimes you've got huge areas of manipulation that are just really, really out of character. And then there are ways that I use, if I'm using the stop loss, that I'll go before that manipulation and take some of the ATR readings then to use. But in using it as stop loss, again, it's the same kind of thing that you could just use the 1x or 2x and adjust your stop loss accordingly. If you were going 33 pips, you just set it here at 33 pips. If you're doing the 1x is 22, and you're not having to look at structure, you're not having to look at anything. You're going, no, my rule is that whatever this ATR says, regardless of what I see, that I set it there and I've tested it out and I know my strategy. And so it can give you so much freaking confidence, and it takes all of the emotional ups and downs off of the table and lets you just rock through your trade management. So right there's two ways: using the ATR as my take profit one, using the ATR as my stop loss. I've also used the ATR as far as when to close a trade. If I find that once I did have a strategy that was like this. It was an indicator based strategy, and I found that once it got past the 2x ATR, there was only like a 2 or 3% of my trades, it was a lower time frame strategy, that ever went past the 2x ATR. And so it wasn't enough to leave a runner for those 2 or 3% of trades that ran past the 2x. I just closed that trade down at my 2x ATR every time and moved on to the next trade. Done. Next. Put money in my pocket. I'm not interested in the 2% of the trades I take for the runners. And so in that case, you would do the same exact thing as you're looking at your ATR from the candle before. At least that's the way I do it. Take in, you see 22, and in this case, we would be saying, oh, it's 44 pips. And we come in and we see, in this case, we won that trade. We exited right before the trade plummeted and would have taken us out anyway, having stolen what little bit was still riding. So when you are testing out and back testing your strategy, pay attention to where price retraces and where you might actually be getting stopped out. Don't just say you're winning every trade. Really look at that. And if you find that 60-70% of your trades retrace and stop you out after like a 2x ATR or 3x ATR, close those trades down and jump in the next trade. Don't let them ride out. This gives you valuable data, and that if you will use these numbers, I mean, again, it's not an indicator that's lagging in any way. It's showing you, it's just math. It's just averaging, the last number of pips, and it gives you so much information. Now, there's one more way that I have used this and that can be really cool. And I actually use it, with a different indicator. So here's the ATR, this the regular one, and that one's all cool. But there's another one that's been put out. If you click on indicators and you type in ATR trailing stop, and you're looking for this ATR trailing stop V5 by Trade Automation, and you can star it if you want to keep it. But this is the one that I use when I am wanting to possibly use the ATR as a trailing stop when it's not part of the stop loss that might be my trade exit. Because again, this isn't an entry or exit indicator per se, but I may be trading a strategy, and I have one right now that I'm trading, and my stop loss every single trade is 10 pips. It's 10 pips, period. It's 10 pips, 10 pips, 10 pips. I don't care how I'm entering or what a structure is doing. It's 10 pips. And I have used the trailing ATR to give confluence to my exits. And so I use this, it's based on the same exact calculations. It's just giving you a different visual. And I found this one because I like that it does kind of track and show you whether it's calling for sells or buys. But when the price closes below that ATR, in this case, it does flip to red and show you where that average ATR comes to. But it just gives you that visual of the trailing stop loss, that when price closes below that or closes above that, crosses it in some way, it will change. Now, the way that you would use that is, let's say that you were, let's just zoom in a little bit here. Let's just say that you were entering a sell trade where a price pushed down and pulled back and pushed down, and you looked at this retest right here because you're a smart trader and you trade these pullbacks and make that profit. And let's say that you decided to take a sell right here. Well, with this particular trailing ATR, when you're entering, if you look right up here on the readings that pop up for this exact candle, it's going to tell you it's at 1.20865. And so if you come over here and go 1.20865, this is your, let me get it exact. Let's see, 1.20865. Now, this is a huge stop loss for me. This is the average trailing stop. It is the ATR that's running on the settings right now on this, which again, this is an ATR period of 12. It's the 1 hour on the pound dollar, and that does move a lot. It is the multiplier, though, of 3 right now. I would usually run on a multiplier of 1. And so that's going to bring it way down and would show me on this candle entry right here where my stop loss would be. So again, with this particular trailing stop, we have settings, and we'll go over that in just a second, but you would just use wherever that line is to be that's where your stop loss is set. And so it gives you that price point. When you're going to enter, it's giving you the price point and saying exactly this is the price that you can input as your trailing stop. And so you can either set an alert that when price crosses it, I usually do that it closes above it, that would be the exit. So there's a couple of different ways to do it, but this is another way that you can use the ATR as a possible trade exit when maybe it's not your actual stop loss, and that you would have this trailing because whatever this original number sits as it trails through here, it's going to adjust. It's going to adjust by how much volume got in the market, how much your candles are pushing to the upside or the downside. So you're going to get a very dynamic reaction as your trade moves through and give you a very concrete trade management style. So there you have it, traders. Those are the 3 ways that I've used the ATR indicator in my trading strategies. Remember, using a set management style that fits your strategy can be the missing puzzle piece to getting your trade win rate to where you want it to be. Having a set rule for profits is key to winning trades and not subjecting them to your mood. So put rules in place and you'll be a much better trader. I hope this video has been helpful to you and that you're now able to confidently use the ATR indicator in your own trades. Do back test it, do test it out. Add discipline and consistency anywhere you can. Don't forget to check out the ATR trailing stop, that version 5 by the Trade Automation. See if giving this visual to you helps. If you want to use that for trade exits or if it's confluence even to your trade entries, if it works out with your trade strategy. And if you have any questions or comments, feel free to leave them down below. Thanks for watching and happy trading.